please reach out to me, okay?
Where's
Thank
the
you.
sign-up sheet?
The sign-up sheet's going around. You guys will get a credit hour for it. So it's in the back, and it's going to be coming up front here. Okay?
We'll make sure everyone gets a chance to sign it before you go. Good morning. It's still morning. Oh, Melissa has something to say. She was giving me a finger, not my finger, but a finger.
It was the nice one. It's just getting ready to post, so I just wanted to let you know.
Oh, the sheet?
The video.
Oh, the video.
Okay, you're good.
Oh, thank goodness it's being videoed. Good morning.
Morning. Morning.
Thank you all for being here. I am not Lori Manley, but I am more manly than Lori. She has suffered a tragic poison oak accident, and so is very uncomfortable and would much rather be here with us, but instead you get me. So I was going to say good news and bad news. I don't know if it's good news. The bad news is I'm a substitute teacher and I'm teaching somebody else's materials. I know the subject matter really well. I don't necessarily know, I've read through it, what she's put together in terms of talk flow. But what we're going to talk about today is, and excuse me, let me back up. I'm Eric Kroll. I'm not Lori Manley. I'm with Cross Country Mortgage. This is Travis Smith with Cross Country and Ryan Long with Cross Country. And we're all happy to hang out after and answer any questions you have about this subject or anything else lending-wise that we can help you with. Okay? So the subject is the difference, and then why it's important to you, between pre-qualification, pre-approval, and approval. Have you all heard all of those terms? Okay. And I was going to say there are no wrong answers. There are no bad answers. What's a pre-qualification? Anyone? Don't be shy. It's going to be a long hour if people don't talk.
Well, the buyer gives you their income verbally and what their bills are and all those kind of things, but it's not verified.
Okay.
So to see if they're in the ballpark.
Awesome. That's an exact right answer, and there'll be a slide that talks about it as well. But a pre-qualification is basically, hey, I make this much money, I have this much in debt, I have good credit, or bad credit, or okay credit, right? But that's all it is, okay? So any of us that are in the business can say, okay, you make $60,000 a year, that means that's $5,000 a month, that means you can have debts, depending on the program, of $2,500 a month, including the new house payment. You say your car payment is $300, that leaves you $2,200. How much do you want to buy? How much do you want to put down? Boom, this is it. In fact, people can get pre-qualified just by using calculators on the internet, right? So you're an agent, you're a listing agent. Let's say you're a listing agent, or we can do both sides. If you're a listing agent, what's the issue with entertaining an offer from somebody who's pre-qualified? Because
they're not pre-approved or approved.
Exactly, right? You have somebody who says they have a job, says they have credit, and says they have income or debts. That's all you have, right? So anybody can put anything in. As a buyer's agent, why would you be concerned, or what would your reservations be about working with somebody who tells you they're pre-qualified to buy a $600,000 house?
Because somebody who is qualified can step in ahead of them immediately.
Right. What else on the buyer side?
Not as strong of an offer. There's multiple offers.
Absolutely. Travis, Ryan?
Waste of time driving them around.
Yeah.
Boom. That's the one I'm going to tell you up front, right? So, advice that I would give to a realtor as a buyer's agent is do not take people to see property if they are not pre-approved. And if you have not talked to the lender who pre-approved them. We'll talk about the difference in terms of pre-approvals and where you get it, right? And I can't say it any clearer than people will disrespect your time and your value. They will waste it. They will have you drive them from Gresham to Astoria, showing you every house, and they can't even buy it, right? So don't let that happen to you. It's easy for all of us who only get paid when we do something, right? We only get paid when we do loans. You only get paid when you sell a house. It's easy to go, well, I want to sell a house, right? It's not an unfair expectation to make sure the person that you're working with can buy a house. Make sense?
Can I chime in on that?
Yeah, absolutely.
So in my experience, I've found sometimes, often those newer agents, they feel like, well, like somebody asked me to come show them a house, when they seem to be in a good situation. I don't want to just be like, no, because you want the client, right? So that's when it's really important to team up with your lender, because you can, instead of you having to just be the bad guy and say, hey, I'm not showing you anything, you can kind of have them talk to me, and I'll explain to them that, without a lender giving you, there's no point in going to see a house, especially in this market. It's really easy to say that because you can't even put an offer on it if you can. And we've all had it before where the buyer, all of a sudden doesn't want to bring in the paperwork, and then they find their dream house when they say they're 3 months out, and then they want to put an offer in, but they can't do it. And then sometimes that triggers out of like, okay, I'll get my documentation in. But that's when it's a really good time to talk to, put it on the lender, let us talk, and we can really work together to explain the scenario that, even if they want to go look at houses, it doesn't do you any good because the seller won't entertain it. You'll put it on the listing agent. The listing agent is not going to entertain any offer until you have a pre-approval, and we cannot do that until we have your documentation, get it done. So that's just the time when you're running into that, because I know it can be like you want to serve everybody. I have a friend who's an agent, and she just has people that just kind of push her around. She's out showing houses around. She doesn't even know if they can buy the house. And she's like, I just want to be, she's super nice about it. I'm like, well, that's when you really can come talk to me or your lender and just say, have them explain to you a little bit that it's really not even that we don't want to help you. It just doesn't do you any good to go find a house right now either.
Well, the other thing too, not only if they are pre-qualified, if you're showing them houses that they cannot afford, then anything else that you show them, they're just not gonna like. So what you're doing is you're setting not only yourself up, but your client up for failure and disappointment.
Very true.
And so that's just gonna even cost you more time, because you keep showing houses and they're just like, but I like that other one that I can't qualify for. Yeah.
Well, Travis brings up another great point. So even if they end up being qualified, right, they light us all on fire at the last minute, right? Because you got to get it in. Well, so then we're scrambling to collect stuff from them so we know we can write a pre-approval letter. Okay, and we'll talk about what goes into a pre-approval letter in a little bit. So on, and it, it's not just cross country, of course, but when you work with a lender and you know how they work, everybody's pretty much going to have an apply online button there. Different originators have different philosophies about apply online. I know some of my co-workers, they don't ever want applications online. They want to sit down with the client, they want to walk them through every step of that application and fill it in. I get it. I'm not wired that way. I want them to fill it in. I want to review everything that's in there, and then when we meet or when we talk, I want to ask them the questions to fill in. So it's not that I don't want to know this stuff, but I don't want to fill it in. And most of my clients prefer to do it that way, where I'm not looking over their shoulder or they're not going, oh gosh, what's my husband's social security number or whatever, right? But just about everybody has the ability to do it online these days. But we can do it on the phone, in person, however it works best for the client. And that's what I always tell people. However it works best for you. If you want to do it face-to-face, we can do it face-to-face. If you want to write it out on a piece of paper, we can do it that way. We can get it in the system.
Yeah, we can Skype. We can do it over the computer, so it may not be face-to-face physically, but online, so that they can see us.
Right.
As scary as that may be.
So to your definition earlier, I think this lines up really well with what you said. Pre-qualification is how lenders determine if you fit basic financial criteria for a home loan. To get pre-qualified, you tell your lender some basic information about your credit, debit, or debt, income, assets, and they tell you how much you may be able to borrow. Tell is the key word. Have you ever known anybody who thought they had great credit or said they had great credit, and then they didn't have great credit? Have you ever met anybody who makes $250,000 a year, except they don't make $250,000 a year?
Self-employed.
Self-employed is a good one. Maybe they actually do make $250,000 a year,
Yeah.
but they file taxes
Gross.
appropriately, right?
Mhm.
And they only make $70,000 a year.
Or have you ever talked to somebody that said, I don't think I qualify, so I shouldn't even try. After finding out and talking to a lender, they find out that they can apply. They do qualify.
That's a big one. And so in terms of what came up earlier about essentially requiring your buyers to talk to a lender and get pre-approved, many of them don't want to because they're scared. Why are they scared?
You don't know.
I don't know. I don't think I qualify, right? So what I always tell people is, the worst thing you're imagining is the worst thing that can happen. You can find out you're right. You don't qualify for a house yet. But you know what? You can then make a plan to get to the point where you need to qualify. And you don't know what all those things are, but a professional lender does, right? So it doesn't hurt. Come in, find out. We've all talked to borrowers who, we met them the first time and they couldn't do anything for 3 years, right? Well, I just filed bankruptcy last week. Or, you know, I've got this big debt that has to get paid off, or whatever it is. That, life happens, right? So how do we get you from where you are to where you want to be? So don't feel bad by making them talk to a lender and get pre-approved. It's going to help them too. And you have people who you can see where they are in their station in life and they should be buying a house. You know they should because you're a real estate professional and you're like, you know, you're this age, you make this kind of money. At some point you want to be in this house. Well, at first you got to be in this house, right? You got to get in the market because that's how people gain equity and they move up. So you can help them by getting them on that path, by having them talk to somebody. Lori's got a mix of things in here. This one actually is a document checklist somewhere on our website. So it talks about the things that you need to get to be pre-approved, okay? So we're moving away from pre-qualified. Yeah, go ahead.
So for pre-qualified,
Mhm.
say I'm talking from the buyer's side now, there's not a check on my credit, is that correct?
Nope,
But pre-approval there is.
correct.
And how long is the pre-approval? It's only typically 30 days, right?
I'm glad you asked that question. Most of my borrowers ask that question. I'm kind of a smart ass, and my answer is the pre-approval is good until it isn't. So what do I mean by that? You guys can cheat too.
They go buy a car.
Exactly, and that's the example I give. You could leave my office and go buy a car or a boat, or you could stop paying your bills, or you could quit your job or get fired, right? So as soon as your credit profile changes, as soon as your debt to income, your credit score, those things changes, you might not be approved anymore tomorrow. So
And
I
that
always.
I was just gonna say, that also applies to if you're doing a co-signing on a loan for student loan, a car for your son, or something like that, right?
Well, that's the kind of thing that comes
Yeah,
up.
they don't
People are
think
like,
about
what do you
it.
mean I
I
don't
didn't buy it
qualify?
yet.
It's
Yeah.
like, well, you have $500,000 of student loan debt. And they're like, no, I don't. I'm like, yeah, you do.
You do.
No, those are my 6 kids' loans. I'm like, yeah. Remember when you signed that signature? You're responsible for this debt.
Well, and we'll also say nothing changes at the 30-day point. Let's say they don't find a house until 3 months down the road.
Yeah.
Is their credit pulled again?
So, is it 120 days? So, a credit report from the time it's pulled until we close the loan is good for 120 days. But what I do is, so by the time I pre-approve somebody, I've seen their credit, I know their situation, I know them somewhat, right? And through that process, we're in contact, and we're in contact with you. And the way, we can talk about pre-approval letters as well as part of this, but the way we do pre-approval letters is we write a pre-approval letter for the offer that's being made, right? And my philosophy has always been, for many years of doing this, it does not help my borrower to take in a letter that says they're pre-approved for $500,000 when they're making an offer of $450 and they're asking for something from the seller, right? Because then the sellers are like, well, they can afford more. Why don't they want to pay full price, or why do they want me to, give them closing costs? So I find it helps you in the negotiation to write it that way. So before I write that letter, if it's been the 3 months or something, we talk again. And what type of questions are we asking them, guys?
Any changes to income, assets, credit, anything going on like that?
Haven't bought anything new, haven't applied for new credit, and they might say, well, I applied for a Sears card. Oh, well, maybe that's a bad example. A Kmart card? No, so, no. I applied for an Amazon card.
Blockbuster.
There you go, Blockbuster. Yeah. I opened up, and I've got a little bit on it. Okay, so based on what we saw before, we probably know that's not a problem. You haven't been late on anything, you haven't been, nope, that's great. So then we're probably gonna write the pre-approval letter for that time. If it's been longer and the pre-approval, and the credit report is no longer good, then it depends how well we know and trust that borrower, right? So if this is somebody I've done a ton of loans for, you know, they're both doctors, they've never missed a payment in their life, they've got a strong down payment, and their debt to income ratio was 12 before, I'm not gonna worry about rerunning their credit. So it really takes some discretion on the lender's part to know when they can write that pre-approval letter. But definitely within, if it's after 120 days closing the loan, which means we might have to do it mid-loan process, we do have to run another credit check. Anything else on that, guys, that I left out on her question? Okay, so the things we need to move from a pre-qual, and we do have pre-qual discussions, right? Hey, looks like you could afford about this. Is that what you were thinking? Here's about what that would cost. So it's not that there's no value in having that conversation. There's just no value to you to take them to buy a house, okay? So when we move from that to pre-approval, we're required, well, this is moving beyond that. So, see, this is where it's not my material. We're gonna need the tax returns. We don't need a fully executed contract for a pre-approval. It's the part I'm gonna take out of this. But we're gonna actually pull their credit. People find stuff on their credit all the time that they do not know about.
Yep.
So there are the parents who don't know that we have to hit them for several $100s worth of student loan payments. There are the people who don't know their ID was stolen and somebody opened up a bunch of credit and didn't pay it. There are, you know, all kinds of things we find out that they don't know. I've had people find out they've had judgments filed against them when I pulled their credit report. They're like, what? Yep, you got a judgment in Multnomah County against you. I have no idea what that is. Probably want to figure it out. Right? Another thing on credit report that surprises some people, we cannot close a mortgage loan if there's a disputed item on the credit report. So people will say, I don't owe, I had one myself. Verizon, I do not owe you $17. Yep, you do, turned you over to collection. We sent you a bill, but you never did, didn't happen. If I dispute that, while I'm in the process of trying to get a loan, when I'm trying to use that credit report, I cannot close a loan. And that's one that catches a lot of people by surprise, and they don't understand how that could be, right? Well, how it can be is, if you know anything about the credit repair industry, they're not all evil bastards, but many of them are. They try to manipulate the system any way they can to get people's credit scores up, right? So all the credit bureaus have a policy, or it's not even a policy, it's a rule, that if I dispute something, they have to respond to that dispute in, is it 30 days, do you know?
I can't remember the exact
It's
time.
either 30 or 60 days.
Yeah.
They have to respond to that dispute, right? So if I say, hey, I don't owe Verizon this, I'm disputing it. Whoever's reporting it, Experian, TransUnion, or Equifax, has to respond to that, okay? If they don't respond, I can make them remove it. So what some of these credit repair companies do is they just bombard them with letters. And then they go, 32 days, you didn't respond in time, boom, take it off. So that was how a lot of these people were fixing their credit, even though it was legitimate stuff that was getting removed for wonky reasons, right? So as an industry, this was so prevalent, the mortgage industry said, if there's a dispute on there, we're not letting that slide. It has to be done, removed, off, no dispute. Removing a dispute can take a while. You would think that you could say, hey, Verizon, I'm no longer disputing it. Here's your $17. Well, to get the agencies and all that to remove it can sometimes take a while, okay?
What's a lot?
Weeks.
Weeks.
Yeah. So the reason that becomes important in the whole pre-approval scenario is the sooner we get with that client and pull their credit, the sooner we see that.
But after 30 days, if they haven't responded on it, isn't it removed? Can't you insist that it be removed?
Yep.
So that takes care of it?
Nope. If I've sent the dispute in, that means they already received the letter, right? It's on there. So I could continue to dispute it and sending letters, But as long as it's showing disputed on there and it hasn't been removed, if they've had to remove it and it's gone, then I don't see it on the credit report and it's not an issue.
That's what I meant.
Yeah, if it's gone, then I don't, then it's not an issue. Yep. Yep, we don't worry about what's not there.
But if it's been disputed, we see the credit report, the credit account is showing disputed, and then afterwards it's removed, we still have to get the credit report to show
That it's removed,
that
yeah.
has been removed, so that can take a while.
Oh, I understand that,
Yeah,
yeah.
yeah,
yeah.
It's funny you had Verizon because similar.
You had that too, yeah.
issue with those
Right.
people.
They're like, well, we sent it to you. I'm like, all my other bills found me.
They gave up, by the way.
See Comcast all the time too.
Comcast is a big
See
one,
that all the time.
and sometimes, you know, the other thing, again, talking about why it's good to identify this with a borrower up front. You know, I made fun of the $17, which was my personal experience, but some of them can be big or small, and the borrower can be like, I'm not gonna dispute that, that's not right. Okay, so in my case, so this you wanna be right about $17, or do you wanna buy a house?
Yeah.
All right, I'll swallow my pride. You can redispute it afterwards, right? But it has to be off to close the loan. Okay, so we've got the way we establish, let's assume the normal situation, and by normal I mean not most of the people in this room, right? That you get a W-2 and you get pay stubs and you file taxes and you're easy. So that's how we look at income, right? We look at the last 2 years' tax returns and W-2s, and we look at their last 30 days of pay stubs so we can see what they've made year to date. And you know, people get raises, all that stuff happens, and there are calculations that we do to come up with their income based on looking at that. Make sense? Pretty straightforward. We're all in a different boat, right? Because we get paid commissions, it becomes more complicated. We collect those same things, depending how we file taxes. If we file as a W-2 employee, it makes it a little bit simpler. If we are a 1099 employee, we have our own business, then it becomes a self-employed loan. You could be Schedule C, you could have a S Corp or an LLC. All that changes how we document income. Before we're writing that pre-approval letter, we gotta get through all that.
Do you wanna, talk a little bit about day one certainty?
Yeah, well, I'd like you to.
Okay. So, it's possible for a buyer to get approved without having to provide as much documentation. So we're gonna try up front, if they work for, prefer an employer, they're a W-2 employee, to make it so that it's paperless if at all possible. So it might not require them to dig out W-2s, pay stubs, all those things, and that can also create less stress for them, less time going through the approval process, and make it a lot easier for the final approval to get your buyers approved quickly and on to buying their house.
It's a new thing in the industry over the last couple years, and sometimes it reduces paperwork. Yeah,
So
You're
if-
still pulling your credit report though, right?
absolutely.
And then, okay.
Yeah.
Yeah, you just don't have to provide pay stubs, W-2s, tax returns. Basically, a lot of the larger companies around here, like I'm sure Intel and stuff, there's something called the Work Number, which is a third-party service, which basically has all their income information, and we can plug in their information to that website, and it will send us a document that has their exact income, everything laid out, so the borrower doesn't have to provide any of their income stuff, and it's already approved through Fannie Mae and Freddie Mac, to where, or is it just Fannie? I can't remember which on that, but they sign off on it that as long as their company works through this system, they accept the income as it comes in, so they don't have to dig up any of that stuff for us. And our company also has one that works that way for assets as well. It's like, I call it military grade security, but you can basically put in your whatever asset bank account that you have, and instead of going through, because a lot of people have a lot of trouble, either they just don't get mailed statements anymore, they have it online, they print it out, and when you do that, there's a lot of complications you might have seen where you have to have like URL, so they know you didn't just type it in a Word document kind of program, but you can just upload your information through our system, and it just will kick all your assets. So in a lot of scenarios, it's getting more and more common with more companies going online and using services like the Work Number. You can go in with just bringing in your ID, a little basic other information, but skip your bank statement, skip your any of your income documentation. As everybody likes ease nowadays, it's something that we love it.
You can do basically everything by from your phone,
Yeah.
your smartphone. So
And it's guaranteed.
So we love that more than then the buyers trust us. We don't have to get all that stuff, and we don't have to hound people, and we don't say, oh, we have this gap between pay stubs and all that. It's much easier for us, so we love it. But it's getting to all this same info, right? So let's look through this list real quick. Homeowners insurance quote's a big one. Man, I don't know, do people just not believe us that we actually need to know what the homeowner's insurance is gonna be on the new house? That's the biggest thing, bars are, I'll get to it. We can't underwrite the loan until we know how much the insurance is gonna be. We need this info. Oh, I was gonna talk to the guy that does my car insurance. Was going to isn't working. Talk to the guy who's, we'll take it from there. You need to get a quote, we need to have the contact information. So that, for some reason, is one that becomes an issue. When you don't have pay stubs, right, Social Security, pension, things like that, the award letter is often the easiest way to do it. The last 2 months of bank statements, another one that gets people all the time is that anything that says page 1 of 7, we have to have all 7 pages. We know the last one says left blank for whatever reasons, but the underwriter is required to look at page 1 through 7 if it says 1 of 7 pages. And people are like, oh, I always throw away the last 2 pages. It's like, yeah, of course you do. So sometimes they have to go into their bank or do something, it becomes inconvenient, but we have to have that. Account check is the thing that Travis was talking about. Within the application, it says, you know, where do you bank, and you log into your bank from account check, and they cover, with rounding error, everybody, right? So every bank, every credit union, everywhere. So if you have a client who logs in, they can log in, they're logging in, we're not capturing their login information, and it just shoots us 60 days. We love those. Much easier, okay? Current mortgage statement, whether you're selling a home, we still have to document current situation. If it's not sold, whether you have more than one home, we have to know the principal and interest, the taxes, the insurance, the HOA, the mortgage insurance, all of those things if applicable, because all of those go into the debt to income calculation, and we don't have them any other way. Okay? Lease rental agreement. Not really. Typically we don't need the agreement, but we need to be able to document their payment history for the previous 12 months. So if it's a property management company, that's usually pretty easy. If it's an individual, it gets more complicated, right? Canceled checks, things like that. So that can slow people down. Homeowner's declaration page on their current house. Divorce decree, legal separation. So here's a neat thing about lending. We cannot discriminate on anybody based on their marital status. Therefore, we can't ask other than in the application. It says married, unmarried, separated, and what's the other one?
Just yeah, those are 3.
So they fill that out, right? But there isn't anything that says divorced. If there's a divorce decree out there that comes up in any way, the underwriter has to see it. Why might that be?
Alimony, child support.
Absolutely. What do you owe, right, on a monthly basis? This can become a not great conversation when somebody's been divorced for 20 years and they're like, I don't have that. So we never ask if they're divorced. If they say they've been divorced and we know that there isn't any alimony or anything, we kind of try and ignore it as best as we can. If they tell us we're divorced, we have to see it. Some people get really uncomfortable with that, as you can imagine, right? Showing us their divorce information. As I tell them, I don't care. I just want to get you this loan. I've probably seen weirder stuff than what's ever in your divorce decree, so you know, it'll be okay. Child support, there isn't always a divorce, right? In order for there to be support payments, we run into that quite a bit, so we got to know about that. And the application does ask, right? It asks if you owe any support stuff. Some people don't put it in. It can come back to bite you. On a VA loan, we need their DD-214, their separation payment. And then earnest money. This is another one that gets a little interesting sometimes. So we have to have those 2-month bank statements. and then we have to see the earnest money clearing, and we can't have a gap. So oftentimes, we're chasing from the last statement to when the earnest money cleared, right, to see everything that happened there. If they do that account check, you just go back in and hit an updated date, and boom, it's done. Another reason we love accounts. Do either of you guys ever have people who have gift letters?
All the time.
Yeah. Any tips on gift letters? I've got my big one, but.
Let's hear yours.
My big one is, if you're getting a gift, this isn't about the letter specifically. Many programs you can receive a gift from a family member, right? Happens a lot, really does a lot, not a problem. Outside of FHA, if somebody's doing a conventional loan, if the gifter wires the money from their account to title, that's all we need to see from them other than the gift letter. If they're FHA or VA and they're gifting, or if they write a check and they're gifting, then we have to start looking at the gifter's bank statements. Also an uncomfortable conversation. Hey, Mom, Dad, thanks for $20,000. Now I need your bank statements. Right? Or grandma, or whoever it is. Yeah.
Is there any limit on gifts?
Yes.
Amount?
In some programs, there are restrictions to how much can be gifted. Typically not, though. Like on a conventional loan, the gifter can gift all the money that's being put down for the down payment and the closing costs and whatnot. Can you think of the specific ones? I know certain programs have limits, or that the buyer has to have 5% of their own proceeds. That might be once we're wading into jumbo territory.
Yeah.
But there are some restrictions on gifts on some programs. But typically, and we see it a lot, right, for first-time buyers and things like that, they're getting a gift of all the money. Another thing on gifts is I'm often asked, well, what if it's a loan from my dad? I'm like, that's okay too. But it has to be a real loan with a contract, with market rates, and we have to hit you for the debt. They're like, oh, maybe I'll have them give me a gift. Right? So if they're telling us it's a loan, we say, great, get us the contract, because this gift letter is going to say this is a gift with no repayment terms, right? I suspect many of my recipients of gifts gift money back to the gifter all at once or over time, but it is officially a gift, and everybody's attesting to that at the time of signing. So we're not like lawyers and priests, right? There's no non-disclosure thing. If we know stuff, we got to have it in the file, right? So that's why we try and tell people up front, if they're saying, what about a gift, what about a loan? We explain the difference, and then they tell us what it is. Yes?
My question is, years ago, it was a rule that I may give without taxes and everything for everybody, only 10,000 for each person. For example, this, your kids are buying a house, you may give 10,000 to husband, 2,000, to wife.
Yeah.
But otherwise, it will be taxable this amount.
Yeah. That becomes a tax question. I would never advise anybody on that because I don't know. They're like, is there going to be a liability on this? I said, that's a question for your accountant.
So how I always address that, and I believe it's 14,000 now is what the limit's at, but basically we don't report anything to the IRS.
Right.
So you guys have to handle that as much as you want to do. I've never had, I'm sure there's people who have gifted, I've had plenty of people gift well over $14,000, right, and I'm sure there's some of them that did not report it to the IRS. I've never heard anything come back from it. But all I say is, I'm not going to try to say, oh, here's how you can get around it. We don't report anything to the IRS regarding the gift. There's nothing that doing a loan with us that's going to get informed to the IRS that's going to say that. It's on you, however you handle your taxes and want to do it. What the right thing is, talk to a tax advisor, but it's not something that we're reporting, because that's a question I get a lot too. And again, I'm not going to say, oh,
we're not going to tell you
it's not
there's
gonna
no tax
happen.
consequence.
Can't do that.
Even if we know there is.
Can
Right?
you get gift from outside the family?
It's much more difficult. So FHA and VA, the answer is a flat no. In other cases, sometimes. So we see a lot boyfriend, girlfriend, right? Why does this make sense? Well, I'm not on the loan, but we've been living together for 7 years. I'm going to give her, and I'm going to keep living there. Things like that. But it's very difficult but sometimes it happens. I've had the non-blood relative uncle, right? That he's like an uncle to the family, they've known each other forever, that type of thing. I've had an ex gift their ex-spouse, you know, so there are some caveats. FHA and VA are very strict, has to be a family member.
Conventionally, you have to document a long-standing relationship, so it's not like a clear thing. But I remember one file a while back where the guy like sent pictures of him and his buddy back when they were kids, like hanging out together. It's like taking an underwriting, like they have a long, like they're basically family. You know, it's like when you got the cousin who's not actually a cousin kind of thing, but they're super close. And also another really weird one, which I have very high suspicion, but I can't say anything on, is if boyfriend and girlfriend cannot gift. If they're engaged, it works. And I've basically, without telling me, people figured that out, and I had a borrower, and they got engaged, and then they bought a house together. And I can't, what do I say? Like, oh yeah, did you really get engaged? Like, how do you? There's no way to prove it.
Show me the
loophole
ring.
in the system. And if they decide not to get married, that's one thing. But I was like, all right, you guys are pretty clever. I can't.
Right.
Yeah.
We checked your Instagram, this is not real.
Yeah. So it's like, there's some weird guidelines in there that you can get around.
We called your mom, she said no.
Yeah.
Fannie Mae and Freddie Mac, you've all heard of those. I call them regular loans, right? Vanilla loans. They're the two agencies that write the guidelines, they write the rules. They each have what are called AUSs, Automated Underwriting Systems. So when we're going to place a loan with one or the other, once the file's all in there, so including the credit, including the incomes, including the debts, the debts as well as the debts. We run it through the automated underwriting system, and it tells us we have a loan, we don't have a loan. Okay. Ideally, on your pre-approval, this has been done. I'm going to tell you I'm guilty of issuing pre-approvals when this has not been done, but only because I know, right? So I don't need the machine to tell me these people qualify. There's nothing iffy. It's not borderline. It's not we don't know. I absolutely know that they are pre-approved or pre-approvable. But ideally, this has been run, and you can't read all this, but you're looking for an approve eligible. I think that's actually the next slide. Yeah. So down in the bottom right corner, you're looking for approve and eligible, not refer and not ineligible. There's also caution, and there's a few other things that come up when you run the underwriting software. And basically what that software is saying is, if everything in the application, everything that's in is true and accurate, then you have a loan that fits the guidelines for either Fannie Mae or Freddie Mac. And I say, if it's true and accurate, is this doesn't read their W-2s, their tax returns, things like that, right? So it still we have to document those things for the underwriter to look at to match it up with the automated findings. Yes, sir.
Time that's requested, about how long on the average does it take for you to get a pre-approval?
Pre-approval. That's a great question.
Or what are the factors that
Sure.
speed it up or slow it down?
You guys want to take a crack at that before?
I mean, if they apply online, give you the documentation, they're straightforward W-2 salary. I mean, you can do it in, I don't know, an hour, 30 minutes, an hour. I mean, if it's really vanilla, it's piece of cake. If if they're self-employed and they own 8 different companies and a bunch of different investment properties, and they have a couple in an LLC and a bunch of crazy things going on and a few interesting things going on, their credit report, it can take a long time. So there's really no. It just depends on the complexity of the borrower. Everybody's different. If they provide information up front, you can get it done. Especially if they're just super clean. I mean, that's the scenario where you have all their documentation, you pull their credit, it's 804, and their debt to income ratio is super clean. It's nothing. As soon as you hit the button, it takes 5 seconds before it gives you the answer back, as long as you put in the information. So if it's a clean borrower, I mean, it can turn around in a half hour if you really have all the information. I mean, taking the application is the longest part of it if it's a straightforward W-2 salary guy.
Motivated buyers that are willing to get you their information right on the spot if they have the time, or if we can get through day one certainty, go through account check, and without them having to provide the documentation, we can get it all computerized. It can go as quickly as half an hour, an hour.
Is Social Security under that, if you call it day one?
Day one certainty.
Social Security income?
No, so.
Of course not.
But that's usually pretty easy to document.
Yeah.
Yeah.
I was gonna say the same thing, it can be very fast, or it can literally be weeks. I mean, we see people with 17 LLCs.
One of the biggest things, I think you guys probably heard the term, is a verification of employment. Have you ever had a lender say we're waiting on a verification of employment? So especially at smaller companies, so the work number, that's what they do. You get your verification of employment through the work number. That's the day one certainty. They're a big company, but if you're have a friend who owns some little, cafe shop or something, that's probably not a big, huge industrial company, and they have their own HR lady and everything in there, or sometimes they only have their own HR lady. If the borrower makes commissions and bonus and it's not a fixed salary, or even if they don't work, a consistent amount of hours, we have to get a verification of employment that shows their last 2 years plus their year to date, so we can determine how many hours. A lot of times people are like, oh yeah, I work full time, and then it comes back and they work 36 hours a week, or they're like, I work 40. It's like, okay, well you have to actually work 40. I mean, you might think, most weeks I work 40, but then if you look at your 2.5 year average, you only do 36. And that can really hang up a lender when it seems like it's a vanilla scenario. And then, you see that they made a huge commission, back in 2 years ago, but then it's been trickling down. Underwriting doesn't like that because it's trending down towards zero. But that's a big thing. I'd say the number one thing that can hold up a pre-approval is a lot of HR managers, or if it's the owner who has to do it, aren't very motivated to get you back. So you call in and say, hey, I have a borrower trying to put an offer on a house, or they're looking to buy a house. I need to get a verification of employment filled out. And sometimes you have to pester them, just continue to call them like every other day, nag him, and then tell your borrower, like, hey, can you let them know this is really important because we can't do it until that? But that's one of the big things that hangs you up.
So, Travis brings up a great point, and I got hit by this recently. I got the VOE on the borrower. I looked at it. The income was fine. We're just rocking along on the loan. They're under wrote the pre-approval. We're under contract, doing all that. And out of underwriting, it comes back, well, we can't count, he's only been at this new job for 4 months, we can't count the commissions. The guy paints cars. I'm like, excuse me? Yeah, it says he's made this much year-to-date commission. And I know how he gets paid, and how he gets paid is I call it a piecework, right? But it's hours per, like if he paints the fender, it's an hour, whether it takes him 30 minutes or 2 hours, right? Well, his particular company calls it commission, and on the VOE, it said commission. So we can't do this loan because of how short he's been receiving commission, if he was truly a commission employee. So to Travis's point, that was a lot of work with getting the borrower to go into the owner of the company saying, these people are trying to reach you, they need this, they need to explain what they need and all that. And we just went in and said, okay, to us, commission means you're selling something. Is he selling something? No, he doesn't sell, he paints stuff. Okay. Can you explain that and then fill out the VOE separately? Don't use your internal word, it's a trigger word for us. And they were able to do it, we got it done, but because I didn't notice, none of us noticed until it got to the underwriter that it said commission, because we knew what the guy did, right? It wasn't a problem until it was a problem. It slowed us down. Yeah. Okay. So, should have the AUS, Automated Underwriting System, results prior to a pre-approval. This one, as I was clicking through, I was going to redo it because this isn't how it works in my mind. So, to me, the application is the first part. Okay? I won't write somebody a pre-approval if they don't have, if they have not put in an application and I have not run their credit. I won't do it. I lose deals because I won't do it. I lose deals to people like you because I won't do it. Right? Oh, I know they're really good. I'm sure they are. I'm not disputing that. I'm not putting a letter, my name on a letter that says they're pre-approved when I have not run their credit and I have not seen their stuff. Okay? So to me, that has to be the first part. But once you get pre-approved, and the payments and rates, that's the kind of thing we can talk to people about up front. I'll redo my rates class at some point and I can get up on that soapbox and talk about rates, but people always want to get pre-qualified and then they want to know what the rate is. And I don't know, I'm earned your credit. You said it's good. Well, if it's above 740, your rate's probably going to be around this with everything else you described, but I don't know because I don't know your scenario yet, right? But we're always talking about programs with people. People are coming in, what are you trying to accomplish? And then it's our job to know the options, right? It's our job to say, hey, you've got 5% down, but that's all. you're not a first-time buyer, so you can't do the 97% Fannie Mae, Freddie Mac. With your credit score, FHA is gonna let you keep a little bit of that money, either for the closing costs, if you can't get them provided by the seller, or, you know, you inevitably are gonna need money when you move into the house. So it's our job to have that experience, go through the programs with them. It's not our job to choose, right? It's our job to inform them and give them the information they need.
As I said, a big one on that is like with VA loans. Like I have a big kind of issue. I mean, there's a time and a place for everything, but there's certain scenarios where I think it's a little foolish to be, you know, when you see people paying massive amounts of points. I see that scenario, and so it's up to people's preference. Sometimes, you know, their dad helps them buy down their rate because they want it for a long time, but sometimes there's a guy who's in the military and he moves every 2 years and he has no interest in ever converting his house to a rental. He's just going to go buy another house. He's already done it twice, and then he comes in and some other lender goes, oh yeah, no, I can get you a lower rate, you know, and then you look, it's like, oh, he's charging a bunch of points. Why buy down your interest rate when you know pretty much it's written out that you're going to be there for 2 years and then move out? You can calculate, okay, you're paying $2,000 in points to save $22 a month. Your break-even point is 6 years. What are the odds you be in the 6 year? Absolutely none. Do not pay points. It makes no sense at all. But then when someone's talking, like, well, how come he's got a better rate? It's like, well, there's more.
What's
than
better
just
for him?
that. Yeah, it's like, well,
Right.
look at how much cash you're paying for that. So it's a little. That's when you really want to, you know, you just want to work with a lender who you like and trust. But and there's some scenarios where that's, you know, borrowers, it just makes sense. So I'll get the lower payment, I pay some more up front. But you really want to kind of look at, is this your forever house? Do you have
Right.
any interest in converting it to a rental? Maybe you don't pay points. Maybe it feels a little higher to do that, but maybe you put that money, you know, keep that as an emergency fund. So that's where I, you know, my favorite part of the job, but I think that's where we're a key advisor, and I can't guide it towards you. I can't tell somebody do this, but just make sure they understand, you know, show them the break-even point on if they do decide to pay points.
Is that a standard, like a 6 year is a typical break-even point on paying points, or did you just kind of?
It depends on all, there's a lot of factors going into it, but depends how many points you're paying and what you're doing. It's not as clear-cut as that, unfortunately, but it's pretty simple to show. I mean, you just
It's simple
monthly
math.
savings divided
Yeah.
by, you know, how much you're paying for the points, then I'd always divide that by 12, you know, 4.3 years.
So again, I'm gonna plug my, next time you see my rate class, I'll go over all that with you. But basically the answer is, each rate costs something. And that cost could even be a credit. If you take a higher rate, right, you could get a credit for taking that higher rate. That makes sense for some people. They're like, why would I take a higher rate? Because you have exactly 3.5% down and you have closing costs to pay. You don't have any other way to pay it. But if you take a rate of 5 1/4, and maybe that sounds outrageous today, but guess what? We're giving you $5,300, and that solves your problem. And your entire difference is you know, $70 a month in your payment. But you can buy the house, and you have enough cash to do it.
Can you refinance that later?
Yep.
Absolutely, yeah. A loan estimate is once we have a deal, right? Once we make it an official loan in the system, it's called a RESPA trigger date. We're required as lenders to send out disclosures within 3 business days, and that includes a loan estimate. There are certain things in the loan estimate that can't change, right? And certain things that can change before you get to the closing disclosure at the end. So TRID, if you guys were in the business in 2015, you remember when TRID happened, right? No more sign and fund the same day, you know, get docs out and fund the same day, all that kind of stuff, the 3-day waiting period. All the loan estimate and the closing disclosure, the CD, were part of that. And there are dates, we have to issue things and dates that things can't happen until other things happen. And again, this is a little bit out of order to me because you got credit reports down here. Obviously, you get the appraisal and all that. If you can't tell, I didn't like the first choice of slides there. Okay, so you're not getting in the car, you're not wasting your time with anybody who won't take the time to get pre-approved, right? I tell people that to me. Why won't you write me a pre-approval letter? Because you haven't filled out an application, I haven't run your credit. Well, you know, I just need it. I'm like, look, if you're not invested enough in this to fill out an application and do what needs to be done, I'm not your guy, right? Go online. There are plenty of online letters that will issue you whatever letter you want, right? I don't think it helps you as a borrower. It certainly doesn't help you as their agent. Okay, this is what she's included in here is company specific, okay? So there are other programs at other companies. What we call ours is Fast Track. And what Fast Track is an actual approval. So they don't have a house, right, but they wanna buy a house, and we wanna give them something stronger than a pre-approval. So pre-approval, again, remember I said if we run it through LP or DU, and it says the findings are approve eligible, that works. But it's only based on the data that's in there, and it's viewed by us and or our assistants, not an underwriter, right? The underwriter has the final say. They're licensed and qualified to look at the guidelines and know we can count this income, we can't count that. Travis brought up the declining commissions, right? So what is the number we get to use? We have the history, but it's going down. What do we get to use? Is it the average? Is it the lowest? Well, we might have it in there wrong based on what the underwriter has to have. So a fast track approval, again, moving from pre-approval to approval, is we submit that borrower's complete file to an underwriter, right? So they say, with this purchase scenario, right? So this purchase price, these taxes, this insurance, this HOA, whatever that is, this borrower is approved for that loan.
So
Yes.
that's the same thing as a conditional underwriting approval, right?
And in this case, the conditions are property and title and appraisal, right?
What are the disclaimers you put on the pre-approval letter?
Something that basically says good until it's not. And typically those are good for 30 days, right? And then we have to resubmit it and get updated statements and all that. So the advantage to the buyer and to you on the buyer side is you can go in and we have a certificate from the underwriter. I don't like to show it. I still write a pre-approval and I don't like to show that. I like to explain it until the end because that does have a dollar amount on it. So back to that negotiating thing, it might say 700,000 and you're buying something for 5, but they are approved to 700,000, okay? And so I always encourage, even on pre-approvals, I encourage the buyer's agents to have me call the listing agent. So as a listing agent, if you have 5 offers and you see pre-approval or pre-qual letters from Quicken, out-of-state bank, something else, and one from a local lender who calls you and say, these are real live warm people, I've looked at their credit, I've looked at their taxes, they're ready to go, they're a great couple, what can I tell you? No, if one's that and the other 4 are Quicken, which one are you gonna take as a listing agent? Assuming the offers are equitable, right? Yeah, you're gonna take the one that you have confidence is gonna get done. I can't tell you how many times through this down market, I've been told by the listing agent that because I called them, the offer still has to be competitive. Because I called them, that lifted their, our buyers to the top. Very few people do it. With the fast track, I don't even ask you if you want me to. I call the listing agent and say, be sure you understand what you're looking at. This is an approval. These people have been through underwriting. So the advantage is we're not wondering, we don't know. You know, we don't not know. And 2, it's been through underwriting. So all that has to get underwritten is title, appraisal, and all that. So basically, we can start those trib dates and all that as soon as we have an accepted appraisal. So we can close literally, well, as fast as 10 days. We like to say 15 days from an accepted offer with somebody who's fast track approved. So back to your time, your effort, your success with the buyers, we have some agents now who say, go use Ryan and get fast track approved. Because I want to be out there making off, you're buying a 3-bedroom, 2-bath for $400,000 in a good school district. Think that's going to be a competitive offer?
Oh, yeah.
Right. That might be too optimistic, right? But we have people in those windows and we know this is going to be tough. I mean, I get clients and I'm like, I'm probably going to write 10 pre-approval letters. And it's even better when they want to underbid asking price. Don't you guys love that? I'd like to offer under asking price. And you're like, no. Right? But sometimes we still do.
So Eric, I wanted to interject real quick. With a pre-approval letter you're going to get from any lender, it's always going to be subject to underwriting and any conditions that come from underwriting. With the fast track approval that we have here at Cross Country, all those conditions will be laid out so that if there are any conditions, then the buyer is taking care of those while they're shopping. Instead of, they're in contract, now we know what the conditions are, now we're tracking down conditions, which can, delay the process. So, that way we can, expedite and really, shrink the timeframes as far as getting them into the house and closing on time.
And it goes back to the same underwriter, right? So the underwriter already knows it. Yeah, very, very, very cool. All right, that looks like it. Again, specific to us, our company standard is a 21-day close. If you call me and say, Eric, can I write for a 21-day close? I'll say, if I already have the borrower pre-approved, I'm gonna know him a little bit, I might say, I know you're gonna have to stay on me on this borrower as well. Because to meet these hurdles, again, on not a fast track approval on a regular purchase situation, we need everybody clicking, right? You can't say, yep, we wanna close in 21 days, but don't order the appraisal until the inspection's done, it's next Wednesday. Kenzie, you had a question, and then I went away from.
You answered it.
Did I? All right. We're just locked.
Are you the same for refis?
I'm sorry?
Are you 21 days for refinance too? Or is that longer?
Potentially.
I'm trying to think. There's a lot of refis right now. We've had a couple that have been right in about that area.
I think the fastest one we've had was, 17 days.
Again, it's
But it has, there's no appraisal, got an inspection waiver and.
You just opened a can of worms. Has anyone ever heard of that before, an inspection waiver? So when we run that automated underwriting, occasionally Fannie Mae will say, hey, you have a property inspection waiver, you don't need an appraisal. That's the biggest time in any transaction, right? Because we gotta order it, it's gotta get in, they've gotta call the people, they've gotta get booked, they've gotta go in and see it. I guess another way I would answer the question about on refis too, if everyone's on board, we certainly can close that fast. Ultimately, at the end of the day, as a business practice, if I as a branch manager have to prioritize files, I'm gonna prioritize purchases over refis, unless we're up against a lock. Expiration, right, just because.
You want to explain appraisal waiver more to us?
Sure. An appraisal waiver is kind of like a pot of gold at the end of the rainbow. You would think, right, if such things exist, you should be able to go, oh, it's going to exist in this area, right? So I have a buyer right now, 42% loan to value, 800 credit score, low debt to income ratio. They said, am I gonna need an appraisal? I said, probably. And they said, really, for that much down? There's no indication when you're gonna get one and when you're not. There just isn't. Occasionally you'll get one, you'll go, wow, that was a surprise. And other times you're like, seriously, I can't get one? Like on a refi, I'm trying to think, I did hear of one that was on a cash out refi. Somebody got a PIW once on a cash out, which really surprised me, right? Because that's riskier cash out than loan to value. I've had other refis where, again, the amount of the loan versus the value of the house was so small, and we don't get them. I just don't understand why. So there's no rhyme or reason to them. They do happen. I try not to talk about them up front, and I try and have it be like you won the lottery. Yeah. So that's all we have on pre-qual, garbage, doesn't help you at all.
Yeah.
Pre-approval, the minimum you should require from your buyers to get in the car with them, right? And ideally you work with a lender all the time, but even if you don't, if they have their own or whatever, talk to the lender. Hey, the Smith said sorry to pick on your family, Travis. The Smith said that they're pre-approved, what can you tell me? Now I'm not gonna tell you everything about a borrower when you ask me that question, right? I'm not going to go, they got really crappy credit. They can go to this, and I'll say things like, they're tight, right? So we really need to watch this. I'm going to have to do math every time we look at a property because there's some people that are right on the line. Other people, it's, they could afford twice the payment they're looking at, but they don't want to, right? So I bought a home in 1995, and the realtor that I worked with was a friend of my dad's at the time. It was a guy that I knew and I trusted implicitly, right? And he said to me, and I've carried this around since then, don't tell me your absolute bottom line. Why not? He said, because I'm human, and I'm going to be negotiating for you. And if that's in the back of my head versus, for this house, I'm willing to do this. Let me go make the offer, right? So he put that in my head, and it stayed the whole time. I think we serve our borrowers better if we know what they're willing to offer on that home. So, and sometimes that's a bigger picture thing. We know as their lender, they could qualify for anything they want to buy, right? It doesn't necessarily help to tell you that when they don't want to pay any more than $500,000 for a house or have a payment of X. Make sense?
Yes.
All right. Did either of you guys have anything else you wanted to add on pre-approval, pre-qual approval? No, pre-qual garbage.
Don't waste your time with the pre-qual.
Yep.
Yeah.
It's nothing. If you're looking at it as a listing agent, just say this. Just
Yeah.
write it on a napkin.
And then, honestly, for the fast track approval, just, if at all possible, prep your buyers and give them enough time so that we can go through that process. The fast track approval process does take a couple days for the underwriter to review. So if we can.
Count on a week or two
Yeah.
for the borrower to actually get us everything we need, right? Because we need everything because it's being underwritten, right?
So, I mean, if they're brand new and, it's Wednesday and they wanna make offers that weekend, at the very least, let's do a pre-approval. But if you can prep them and give them enough, time, we can get them fully credit approved with the underwriter and their offer's gonna be that much stronger.
Don't let them take you out. I've literally had a call from an agent. I'm in the driveway of this house. We just looked at it with this borrower. Can you send me a pre-approval letter? Never heard of the borrower before. No. Nope. Well, what do you mean? He works at Nike. He makes $500,000 a year. Nope. Right? So just be prepared. I guess if I had you take anything, know the difference of these, right? Help prepare your borrower. You don't have to do any loan stuff. You just need them to get pre-approved or approved, right? Do that. And don't be afraid to not take a buyer out. If they're not willing to do this, it's likely they'll just burn up your time.
We're here to help you get more of your offers accepted, so.
We'll all hang out for a little bit. If you have any questions, not just limited to the subject matter, again, I am not Lori Manley. I am Eric. My cards are right here. These guys both have cards as well.
Not yet.
Travis doesn't have cards. He's
Mine are
not
shipping.
out yet.
They're shipping.
But he has a name tag.
Put that part in the back. Don't tell with your bottom line. Don't ask your buyer what's the most, what's the max. What's the